What is stablecoin? What does that even mean?
Well, look, there is actually use case for this, right? If you're speculating in cryptocurrencies and you want to convert your money back into the system, quote unquote, into the dollar, you can easily put into a stable coin. Again, it is stable, hence the US dollar. And let's say you're paying someone in a foreign country that doesn't want the money to be recognized by the government. Maybe it's like Argentina or a place where you don't want to pay taxes on it. So moving it into stable coin, which is a stable value, makes some sense. But I question, how big is that market? And number two, like as Americans banking, like I get points, I get rewards when I use my credit card. So it just seems to me like the hype around this is just so much greater than the actual utility.
Well, it's kind of really misleading. First of all, it's not stable. The dollar's not stable. Have you seen the dollar in the last 6 months? Have you seen what's happened with Treasury bonds over the last 2 years? I mean, these are volatile markets, right? There's nothing more volatile than interest rates. Well, there is currency, right? So currency is the most volatile market in the universe. So you have something called a stable coin. So stable, clearly it's not. And a coin, it's not a coin, it's a ledger, right? So it's a total misnomer.
Well, the other question is, if you're randomly audited, they'll check to see if you're actually buying treasuries to back, because most of them are in US denomination. But that also creates another systemic risk. That's more money going into treasury bonds. So if you do get a run on one of these stable coins, that could be a huge amount of money that sells out of treasuries at the same time. And that's what we saw when a lot of these banks were unwinding back 2 years ago, right? We had a couple banks where there was a big run on Silicon Valley Bank. All these longer term treasuries were sold at the same time. They were underwater on their portfolio, which pushed the price of treasuries down dramatically. So I think to your point, Bob, there's a lot of underlying risks here that nobody really is thinking about. And that's typically what happens in a bubble. It's just like you've got blinders on to all the different problems that can happen. And a lot of it's because we have two generations that have never been through a real credit crisis, is my thesis.
Well, first of all, the banking system's been doing this forever. If you look at the average checking account or savings account at a bank, they call it a money market fund, but they're paying you 0.17% interest, right? So you didn't tell us you wanted the higher money market rate interest. I mean, even if you buy a CD at a bank, they roll it over by contract into something paying no interest. So, you really got to pay attention. And I just think that anybody who's dabbling in stablecoin or Bitcoin, they clearly don't know what they're doing, because I still don't understand it completely. But, I'm going to keep my dollars in my money market account, earning my interest. And, I've been able to pay my bills just fine for the last 72 years.
Bob's not going to be doing many transactions in stablecoin for the foreseeable future.
But I think the bigger picture here is, and I think that's what we look at when we're investing money for our clients, is the fact that speculation is running rampant right now, right? I even wrote in my notes this week that stablecoins were silly because it is kind of a silly concept, but there's so much money being poured into that market. And if you look at money supply right now, liquidity is extremely high, right? There's lots of money out there to buy lots of crazy things. So I think the point here is, when you're building your portfolio, to go back to the wise words of Warren Buffett, be fearful when others are greedy. This is the time you have to be very, very careful, right? Anything where you're getting outsized returns, it's crazy. Your friend's getting rich, you're not getting rich, as Bob likes to say. Nothing makes people angrier than that. There's no free lunch, I think, is the Payne principle you have to think about right now. So when you're building your portfolio, you have to be very, very wary of what's hot right now, not over concentrating your portfolio, what's hot in the moment, because at some point you live by the sword, you die by the sword. That's why diversification is so key, and that keeps you out of trouble when everyone's getting crazy and wild about a certain asset class or a certain area of the market.
It's not stable, and it's not a coin.